G'day all, Joshua Steger here from etfadvisor.com.au. Time for my weekly rundown of what happened in ETFs this week and what Aussie investors should be watching for the week ahead. So in terms of what I'm going to cover today, I'm going to look at our call of the US correction and where that sits now. Secondly, I'm going to talk about rotation in the market and what we're seeing just in terms of where the money's flowing. And number three, I'm going to talk about Asia again because I think that's really important and it just feels like a tinderbox at the moment. So they're the things we're going to cover. Number one, US correction. Number two, rotation. And number three, Asia. So let's get started. Let's just have a quick look at the email that's already gone out to subscribers today. So just in terms of, let's review some of our key ideas last week. And even though we thought the market was starting to weaken, and we covered that in last week's video, we still had some good ideas last week. And just in terms of these being our top ideas, let's just cover off how they fared this week. So wire, we're looking at copper to move out, and that actually moved out into new one-year highs. Atom, which is uranium, still setting up. I think that's a really key theme, and I'm watching that really closely. Just in terms of energy, I think you can't go past uranium and that whole space. So that's a key theme that I'm going to keep watching, even though it's not ready to go yet. CETF. So that was what we spoke about last week. China, we really like the setup, and that moved out really strongly this week. It was up about 5.5% to 11-month highs. And most importantly, it feels like it's just getting started. So that's a really interesting change in the market dynamic. And I think we expect a really big week. So we'll cover that off in point three. And then we've got clean, which continued to move higher, and that's in the model portfolio. So clean energy theme still playing out. MCCL, Munro, clean energy. So that's still a bit slow at the moment, but still setting up. So worth watching. Robo and RBTZ. So we really like the robotic space. AI and robotics, I think, is a really key theme. There's a few good ways to play it. So here's two ETFs, but they didn't quite move this week. So we'll keep an eye on those. And then Glyn, which is the global infrastructure, that's moved out to new all-time highs. So we've had a pretty solid week in terms of our ideas that we provided last week. And I've got some really good ideas this week again. So once again, if you're keen to subscribe, I'd certainly welcome you to join. And we do have a free 28-day trial. So just look in the YouTube links for that offer. So let's get to the market. So we'll start. So it was a bit of an expectation breaker. So the point one, we've been talking about a US correction, and things were certainly slowing down. So let's go back to this chart, which is basically showing the number of stocks. So basically the breadth of the market. So the number of stocks above the 20-day moving average, a number of stocks above the 50-day moving average, a number of stocks above the 200-day moving average. And last week, if we can just say, draw it back, that's pretty much where we were. And you can see it was looking quite weak. Downtrending, these were downtrending. The stocks above the 200-day was improving because we were seeing a bit of rotation. But on Friday, we had Jerome Powell come out for the Federal Reserve in the US saying expectations for rate cuts next month, and it's just changed the game. It's been a expectation breaker. We were looking for the market to correct, and certainly early in the week it was looking quite dire, and we were positioning that way. But then it can all change in a day, and that's pretty much what we saw. So Friday, some really strong moves. It's pretty much broken the downtrends here. And look, we're not out of the woods yet, but that's a huge move. So as we read it today, things have really changed. So we're just going to continue to play that as investors. The trend is your friend, and the trend is well and truly intact, but there are a few changes. So in terms of how we're viewing the markets now, I think the US correction's probably postponed for a little bit, but there is a few dynamics that have changed in the market that we need to be aware of. So let's have a quick look at those indexes. So you've got the S&P 500, and you can see on Friday that move, and that's pretty much that expectation breaker that we were talking about. And just in terms of that move, I mean, there's 1.5%, but it's bounced. Just look how weak it was pretty much all week, down to the 20-day moving average, and then just bouncing in really strongly on Friday. And it was almost like panic buying. Here you got Nasdaq. So the Nasdaq, and this is a key thing to keep in mind now. The Nasdaq got down to the 50-day moving average. Looked like a really bad week, and looked like we could just fall through on Friday. But you got that expectation breaker and the pop, and so that for us is a real game changer. But there's some key things happening beneath the market. And the key thing at the moment now is it's the small caps that are really running. So this is iShares Russell 2000 ETF in the US, and you can see that strength. It definitely, it had some weakness, but it was holding up. And you can see that selling wasn't as great. And then on Friday, boom, huge move up almost 4%, 3.9%. I mean, that's a huge move, really good volume. And that's the expectation breaker. And things have really changed there. So in terms of how we're seeing the US market now, it's a matter of the trend will continue. And let's just have a quick look at the VIX. So this is a volatility index, and you can see as well, that's just moved down into basically new lows or recent lows. So probably going back to March, just in terms of the lows before the tariff issues all kicked off for the market. So it just shows you how much things have changed in a day. So in terms of our view on the market now, and you can pretty much see that in the indexes now. NASDAQ, I think, is going to be, that's where all the winners have been. I think it's going to be slower, and we're going to see some real rotation into the small caps and into things that have sold off. So that's point two that I want to cover now. So number one, our view on the US correction is, look, that's probably pushed out a little bit now. And now we're going to play with some rotation in the market, and that's pretty evident from what we've seen in Friday, and would kind of expect that to continue this week ahead. I mean, obviously if things change and the US, the small caps sell right back off, and we'll be back to our view that the US is in correction, because it really looked like it was starting to get weak. But things have kind of changed now. We've had new data. This has popped up. So what now our view is that we're going to have some rotation in the markets, and that's going to play out over a period of time. And rotation is actually really good for the market as well. Just shows people will be taking profits in those NASDAQ stocks, rolling into things that have not performed as well. So let's just cover off a couple of those. So this is point two, rotation, where we're going to see that rotation. It's already been happening as well, and it's actually quite important for the Aussie market. So the Aussie market is on the receiving end of some of that rotation, because we're a big commodities market. So you can see the Aussie market's really quite strong, and into new highs this week, and just really there's your kind of breakout, and it's just been trending really nicely up off that 10-day moving average into new highs, and kind of expect further positive action on Monday. The big change is, well, we've had two big changes. So here we've had the financials. So this is OZF, which covers the banks in Australia, and that last week that wasn't looking too good. Basically had this downtrend channel. And but then just in a couple of days, 1, 2, 3, 4 days, and it's basically back up into very close to all-time highs. So we had some clear money flowing into the Aussie market. And the other thing that's really changed is the resources. Resources, obviously a big part of the Aussie market, and you can see this is MVR, and it actually has probably been that's the better performer of the resources ETFs, because it doesn't have those huge exposures to BHP and Rio. And you can see that downtrend, and eventually, there's your bottoming setup, comes up, retests, and now it's just pushed. And you can kind of see, there's holding the 20-day, now it's holding the 10-day, and it's really starting to trend. And I think this is only just beginning, because if you look at, for example, BHP, you can see how significant on the weekly chart, how significant that downtrend has been. So if you consider back in December 2023, it was off kind of 35%. At the moment, it's off about 20%. So that's, basically really has been a really poor performer. And, most institutions will be well underweight the resources. So that's now all changing. People are starting to look at them again. BHP, has obviously found a bottom now and is really starting to trend. So things have shifted. That's really big for our market. You can see the same with Rio as well. That's starting to probably if you just drew a line here, you can kind of see still into that downtrend, only just starting to move. That's kind of the breaking out, retesting, and it's probably only just starting to move now as well. So the big guys have been a bit slow, but obviously gold has been a huge performer, and we're starting to see some speculative money flow into rare earths. Well, obviously started with MP Materials in the US, where the rare earths, the US government put some money in, Apple put some money in, and we spoke about this a while ago. That's a big game changer, and just look at the move. And it's holding that 20-day moving average and looks really constructive there. So just in terms of a move, from May to where it is now, there's 260%. So that's a huge game changer in that space. So you got rare earths. We obviously had gold, which has been a huge performer. Now we've got rare earths. Now we've got critical minerals, and you can see that starting to flow on. So some of those key ideas that we had outlined to subscribers in Australia, or for the Australian ETFs, had been things like XMET. So this is critical minerals for energy, and you can see. Let's have a look on that weekly chart. Just see how much. I don't know what's happened there. Just see. Oh, we had a bit of a technical issue. Just see that's really broken out of this. So here's since it listed, basically did nothing. There's your really long base. Breaks out, retests, and now it's starting to trend. And I mean, that just looks really solid, finding support at the moving averages and really starting to trend up. And just in terms of, there's quite a few other ones in Australia, but just in terms, we've been following MVR, as I said, because that doesn't have that big exposure to BHP and Rio, but there is another one in QRE, the Beta Shares Resources. So this now has a bigger exposure to BHP, but you can see that on the daily chart is really, obviously tracking BHP being 40%, but also it does have other exposures that are quite, or obviously the big resource company as well, and that's really starting to trend now as well, coming out of this multi-year downtrend. So huge changes for the Aussie market. So that's one space where money's been running. Obviously, you got the small caps in the US on the receiving end of some of that money. And also, let me just get through to it. So just in terms, we don't have an exposure for this in Australia, but this is solar stocks. So obviously solar, well, a lot of the clean energy stocks have been smashed. So the way we played it in Australia for members was CLNE, which does have exposure to some solar, but it has other aspects to the clean energy space as well. And you can see, pretty much since when that listed, just on the weekly chart, it listed back in March 2021. It was around $11 and got down to $5. So basically halved over that period, or more than halved. And then, that's when it started to look interesting to us. We started to see that rotation. And that's the thing with the market. It's kind of looking ahead, and you could see that this kind of bottomed out in May, and now, we're starting to really see quite a lot of evidence of further rotation. So this is one example where we were getting rotation in the market. So you can see there's your bottoming base, and now it's just been, getting through all those levels of prior resistance and just creeping higher. So that's a really good one that we bought really well for members, and I think that can go a long way. So just in terms of that being a really nice base, moving out of there and just creeping up, holding the moving average. Just looked a little bit weak there, then just a couple of really big days this week, and basically back into new highs. So then if you look in the US as an example, there's solar. That's just purely solar stocks, and it's exactly the same story since kind of 2021. It was kind of 80 plus dollars, and got down to 30. Very similar base in terms of bottoming, and now it's just coming up against that weekly resistance. But yeah, just looking really quite constructive. And there you have your Friday, big Friday, up 5.7%. So really there's some money flowing into that space. That's an example. So number one, we got commodities. We've also got that clean energy theme, and we've got global small caps. So here's an example. This is from Vanguard. ASX ASX listed Vanguard small cap ETF, and you can see there's your prior highs for small caps at the start of 2025, and we've just hit that again in terms of this small cap. Obviously, tariff correction and just starting to creep, and it feels like now with rate cuts in the US, internationally, the emerging markets will tend to hold US dollar debt. So when the interest rates go down, it's actually really positive for their economies as well, and they'll tend to spend on things like energy and obviously developing their country. So they're starting to save on interest costs as the interest rates go down. So we are really looking for a big rotation play at the moment, and that's why commodities are running. That's why small caps are running. Emerging markets. So here's another one. This is IEM. It's iShares Emerging Markets ETF, and you can see that's just trending away. Look at that weekly chart. I mean, it's pretty amazing. Even into new all-time, or be very close to new all-time highs. There's a point there where it back in 2021 where it spiked. But you can see that's a really solid trend now. And just in terms of what is actually in their geography exposures, you can see here it's 30% China, 20% Taiwan, it's got 16% India, it's got Korea, and then to a smaller extent it's got Brazil, South Africa, so a lot of other emerging markets, but really the bulk of it's here, and China is back on the cards. We'll cover that in point 3. Taiwan's been strong there with the tech industry. India has been a huge performer from the COVID lows, so it's been a bit weak, but we'll also just touch on that. That's looking a lot better. And then Korea had a really good recent pop. So let's just have a look at the way you could play that in Australia. So IKO is the Korea ETF in Australia, and you can see, I mean, look at that move really quickly from the end of May, and it's just run straight up. So it's now in that kind of bull flag, and we're just waiting to see how this plays out. But just in terms of, you've got Korea, you've got Japan now as well. So these are quite, in terms of their some of the companies that are listed in these countries are high tech, robotics, electronics. These are things that are going to play out with that AI theme, and so obviously I have underestimated Japan here, but Japan's looking really good as well. So that's a all-time high broken out. I'd be looking to try and get into Japan as well, and South Korea. So there's some serious money flowing outside the US. And another space that's worth talking about as well is healthcare. So healthcare has been absolutely smashed. So let's have a look from September, and this is drug in Australia, the ETF that covers global healthcare. So if you look at September 24 and got as low, it's kind of been off, say 20%, while the rest of the market's just been absolutely flying. So it just shows you this has not been a happy hunting ground, and you would have thought, healthcare's, global aging population, people wanting to spend more to live longer and healthier lives, but just has not been playing out. So that's, as you can see, there's your kind of downtrend, and it's now, if we have a look on the daily chart here as well, it's looking like it's attempting a bottom. So it's a point where we're now starting to see, just with that, that big shift that we had on Friday in the US, that we are seeing that rotation. We're starting to see some money coming back into these downtrodden areas. So that's another thing to keep in mind. So commodities was leading us out. We've got those global small caps. We also clean energy theme, and we've now got healthcare as well. So you can really see that rotation that's happening at the moment. So we'll just cover one other thing just in terms of that rotation. It leads us to our next point, which is to talk about China and Asia, and that's a big shift at the moment. We've been talking about that in terms of this weekly update for feels like forever, just in terms of some of the setups that we've been watching. So we'll just obviously quickly touch on the Hang Seng index, and as I've been saying the last few weeks, I mean, in terms of a bottoming setup for a large index, I mean, it just doesn't get any better than this. So just in terms of a base, and just slowly creeping out. So just in terms of the daily, it's just creeping, and then this is the futures. So obviously the Hong Kong the market was closed, but the futures are still open. So this is an indication of how the Hong Kong market will open, and you can see really strong. Well, it was up 1.5% there with that news in the US, and certainly expect that to really push this week. One of the things we've been watching there, obviously Tencent's been doing really well, but Baba was the other one, and Alibaba hasn't reported yet, so it's still unknown as to exactly when it will report. But now TradingView's saying Friday we're expecting it to report. But once again, in terms of big cap stock with AI exposure, tech, a leading tech company, in terms of a bottoming setup, you're not going to find one much better than this. And just moving out of that downtrend, retesting, it just feels like it's waiting for earnings, and that could really kick things off. And you've got to remember, there's a lot of AI exposure that is just not getting valued properly in China and in Asia in general. So there's some really smart tech companies there, and obviously we know that's where DeepSeek came. And there's going to be a lot more coming as well. So we'll just touch base. We don't have this in Australia, but this is the iShares China small cap into new highs there on Friday. And I don't expect it to reach any resistance until it gets into those 41, 42 level. It's currently at 38. So looks like it still can run quite strongly before it even comes up to some weekly resistance. So really exciting there at the moment. And one of the key ideas we were talking about last week was the China A50, which had been a bit slow, but in terms of our model portfolio, we've got CNU in it, and that had been leading. So this is China new technology exposure. It looks a little bit like the A50, the China A50, but this is where it all changed when it started to move out of this space and just started to trend, whereas the A50, so the top 50 stocks in China, weren't really doing anything, and this was really starting to fly. So this has led the China market out as an indication, and then finally this week we had a really strong week from China. So this is a better look on the weekly chart, but you can see it was just in absolute no man's land. Late last year they announced stimulus, and obviously that changed. So there's your big step change for the Chinese market, the government stepping in to kind of prop things up, and then it's just sat in this space, just chopping away. Obviously tariff correction, chopping away. But the thing now, it's just really tightened up. And we've been watching that the last few weeks. It was probably one of our key ideas last week. And then just look, it's up about 5.5% this week, 2.5% on Friday. Expect a huge week for Asia again. And it's another place where we're getting a rotation of money. And look, it's still, in terms of valuations, China and Asia are still, and emerging markets in general, are still very cheap, and all the money has really been in those, those Magnificent Seven stocks, those FANG stocks, and finally, we've got some rotation happening, and really can be what is obviously playing out in Australia as well, with Australia hitting new all-time highs, commodities coming back online. It's actually a really interesting time to be an investor and to have a global outlook in terms of the ETF themes and sectors that you can play. So it's not just we're not just worried about what's happening in Australia in terms of the banks, and because that's where the action's been, but it's more so now what's happening in China and India. That's the other thing that I wanted to mention as well. So India hasn't been doing much at all. So let's just have a quick look at the Nifty, but it now looks like it's bottomed as well. So if you have a look at the Nifty 50 index, and you can see, really like India as a theme, and it had been the top performing market globally. And in terms of economic growth, it's still probably the fastest growing country in the world at the moment. So it performed really well was probably the top performing market out of COVID, and then kind of peaked in September, just in terms of the market, late September last year, and then has now been in this big correction. So we started to watch it here, thought it was going to push out, kind of weakened off again, but just in terms of this setup now, it's actually improving. So that Now you want to see contract there. It feels like it needs more time, maybe perhaps the end of the year. But in terms of a setup there, that's now at highs, setting a really good base. And yeah, that's going to be another key idea for late in the year. But certainly looks like that it's found a bottom now, and now it's just it's going to chop away a little bit, probably next couple of weeks or months. But at least it's not going down anymore. It's just kind of trying to find that point where it can build the energy for the next move. And it just looking at how things are playing out at the moment, it's looking at later in the year. But key idea to watch, and that's certainly not putting pressure now on the emerging markets. So clearly investors are pretty keen to start looking around. Money's flowing, interest rates are being cut. That's why you're getting things like Ethereum moving into highs. Bitcoin is not as strong, but gold's kind of still in this space, but gold stocks hitting the all-time highs in the US as well. So clearly some really big step changes are underway at the moment. So just to cover off what we've spoke about and those 3 points that we wanted to cover. So the US correction, the trend is still your friend and bulls are in charge, so we're just going to let that play out. But point number 2, expect rotation. So we're not calling a US correction yet. I think it's probably delayed a little bit now just with that step change on Friday, but we are starting to see real money flows into small caps, and that's where we'll be really watching. If this starts to weaken off, we'll certainly start to get worried, but I think there's probably room for that to move further. And so expect rotation, small caps, commodities, clean energy, healthcare, things that have been oversold, things that haven't done well. And we've got some key ideas this week in terms of for our subscribers in those spaces. And then point 3, another place where money's rotating to. Finally, China, Hang Seng, Asia Tech looks really good. We do have big exposures already. That's our largest exposure as a theme in the model portfolio. And Asia, that would probably be your last chance to buy it here. I mean, it's a bit extended here, and certainly we've been buying at all these points back here. But it feels like we're just waiting for Alibaba to report. And Asia feels like a tinderbox. So really exciting for our time zone in terms of where we sit near with the Aussie market, and exciting times. So as I said, very happy to be an ETF investor with a global perspective, sitting in Australia at the moment because there's so many good opportunities. Thanks for your time, and we'll look forward to giving you an update this time next week.